Hey traders, welcome to Charts and good to see everybody. Happy Tuesday, everyone. Kicking off the week here. Now, we did a Charts and Coffee yesterday to prepare for the week, and I hope everyone caught that. I walked into topics that are great for preparing for a week, not necessarily topics that are relative to the trades that we have going on right now. I will touch on some of those, what's on my radar, and some of our open trades, long crude, long energy stocks. What else we get into? Short Qs, short Russell, we're short Nike as of right now, which actually brings me into the conversation about hot zones. Now, many of you probably know, especially if you grabbed the sector and macro notes that I shared with you all yesterday. So that's sort of my weekend homework, or do the homework to kick off the week. If you check that out, you'll notice I talk about what hot zones are, and hot zones are those scheduled events, high impact, high volatility events that we know are coming. Otherwise, there's no way to prepare for it. We know are coming, and we want to be able to position ourselves or even get opportunistic on them. Now, we don't have a lot when you scroll through the Forex Factory calendar, unless you've got exposure to New Zealand, maybe the pound, which I am interested in, getting long the pound. We've got GDP on, you can see here on Thursday. That's one of our macroeconomic pillars, and that's 8:30 on Thursday. And then we've got some Meester chatter. So anytime you see an FOMC member talk, especially when it's a voting member, check it out. But then we've got this PCE. In a lot of ways, I think this PCE is going to be even more important than Thursday's GDP. The only economic event that's going to affect me in terms of the earnings hot zones, right? So we have our data-based hot zones and we have our earnings-based hot zones is Nike in terms of exposure to a trade that I have open and then I need to be aware of in terms of managing that open short. So that's a little bit of background on what we have right now in terms of open trades. Quick look at the two shorts that we have open. It's not the Dow, it's not the S&P, it's the NASDAQ and it's the Russell. And these now, for those of you that have been in these with me now, you realize that once I get into a short, it's nothing. Once I get into a trade period, it's nothing for us to be in them for days. We have enough time to take it out for weeks, but it's just constantly checking back on the structure, on the validity, on the point of validity and the validity to make sure that, and hang on one sec here, there we go, to make sure that we're focused on the first the target and what's the likelihood for continued follow through. Are we indeed on the path of least resistance? Let me turn on some lights here. I just realized it's a little dark. All right, there we go. Okay, so that is the setup for the week in terms of where I'll be focused. And then it's really it's managing quite a few open positions. Please remember that there are buys in this environment. There are shorts in this environment. Let's not paint the broad brush of the markets, right? The markets are weak or the markets are strong. It's really in this environment very much specific to where we are looking. Okay, so a couple of things that I did put in those notes, and I want to make sure everyone's keeping an eye on them, are the bounces in the 30-year and in the 10-year. And they've already come back out of the wave. So I know my futures traders, if you've got those limit orders waiting in the wave, you are short. The challenge is if you're looking for IEF or TLT, this is not a valid zone. So please, those of you that are on the future side, you've probably already gotten your fills on ZBZN. On the ETF side, we're going to have to wait and see if we can revisit that zone and get back in. All right. So of course, as always, our Charts and Coffee show is about your questions. Again, quick reminder, go check out the notes that I've posted in the rooms, options room, futures room, of course, the sector secrets mastery. Mastery, folks, you know that's going to be the foundation for the trades to come this week. All right, so kicking it off with the first question here. Hey there, Mike. Let's take a look at ZC and ZW. Sure. I want to be buying dips in ZC. I'm not going to buy a brand new high here, my friend. Even if it's something like what we saw on the 15th, something like a fairly decent move lower into a VWAP. I'd love to see us move back down to the 21. Not much I can do at the current heights. And on ZW, I'm not a big fan of ZW, which is wheat for those of you that are not necessarily futures traders at the moment. But I like ZS, also parabolic. So my concern is wheat doesn't have the same background in terms of the reason. Look, it's not in an uptrend. So why is wheat in chop? That concerns me to a certain degree. This is arguably overbought at this level. So corn, yes. Wheat, I will pass on for now. Thanks for the question. All right, next up, thanks to the 220. Oh, my pleasure, Tim. In XLE, what is my favorite underlying buy the dip, or do I just prefer to buy XLE? We've been talking about XLE and OIH, Tim, and even XOP in the sector secrets mastery. When I look at what is weighted within XLE, I'd rather go with XLE. And what's a really good litmus test for that? Boats and tide, gang. Ragheeism 101. Understanding high concentration weighted stocks within the sector or within the index. And so when I can see that most, say, top 5, top 6, or at least the top heavy weighted names are structured in such a way that I'd be willing to buy all of them, yeah, we could buy a bunch of boats, but we could just go with the tide. And in this case, I'd go with the tide. And right, if I can get down to that 21, if I can get down to that Darvis support, that Darvis 2.0, I'll be absolutely keen on that. So by the way, those dots, that line, you might say, Rog, I don't have that indicator. Head on over to countdowntrader.com. It's right here on the left side, countdowntrader.com. Scroll down to where you see free downloads. If you're on Thinkorswim, just click on the Thinkorswim link. It will take you on over to the box folder where all three, my Darvis 2.0, my grab and wave, grab candles, wave, and the propulsion dots you can download and put on your Thinkorswim platform. And you'll see exactly what I'm seeing. Those dots, those lines. Get those indicators on your charts, get comfortable with the visual of them. And on March 9, we're going to dive into a webinar showing you what I've been doing so far. Well, what I've been doing since really October when things got really bumpy. And, we've had to keep some Dramamine on our desks, not the uptrend of, say, early 2021. That's not what we're dealing with, right? How are we dealing with this current environment using these tools? All right. So thanks for the question, Tim. Next up, could I explain the clearing range concept with the HPMR? So the concept of the clearing range is simply it's not super complicated. It's just, for those of you wondering, what's the clearing range? Is that tricky? No, it's just the first 30 minutes after the bell. 9:30 to 10 o'clock, we establish a high and low. There's your clearing range concept. As far as the HPMRs go, now we're getting into how might we enter the market when we have directional bias using volatility-based support and resistance. Julian, that's what it is. So the concept is, if I would like to be long, then I will focus on support levels. It could be V-score, it could be HPMR, those volatility-based levels. Let me show you what they look like here, for those of you that are not familiar. So those are my volatility-based levels. You can see where the volatility support and resistance are. It's based on time, and it's based on the current highs and lows. So the idea here is that we're able to capitalize on levels that most traders simply don't see because they're not respecting time and the volatility based on this hour of the day. And I'm just using them as support and resistance. I mean, that's all that it is, right? Almost everything that I do, Julian, is going to just boil down to support and resistance. That's really it. And what's really important is, do we want to buy support? Are we looking to buy through resistance? Is this a trend where I can expect exhaustion, or is this chop where I can still play the range? Those are the decisions that we make based on the structure of even a 5-minute chart. So thanks for the question. All right, next up, Justin asks, I have a smaller futures account, 1K. Last few weeks I've been using trend lines the Darvis with an entry between I keep getting stopped out. That's not a strategy, Justin. So you're getting stopped out because it's not that it's a bad idea, but kind of as what I was just telling Julian, what's the environment that you're buying or sorting those levels in? The levels are just there saying, hey, we've stopped here before. Whether we stop there again, exhaust, or whether we bust up through those levels has to do with time and has to do with underlying market structure. So you've got the beginnings of a good strategy, but it's incomplete, right? And the reason you're getting stopped out is likely because either volatility is far higher and it doesn't make sense to be looking at exhaustion, or you have a trend, and you might be using the levels as support instead of as a breakdown or as resistance. So structure has a lot to do with it. In fact, structure, Justin, and thank you for the question, structure has everything to do with it. Just because the lines are there doesn't mean in and of themselves it's a strategy. I hope that helps. Hope that makes sense. All right. So next up, what is a good level to short the rip on in the IWM? Well, I'll stick with the same zone that I alerted before, and that's going to be really in the middle of the wave, probably closer to the 34 EMA on the close. So we've done that before. And by the way, of the two open index shorts that I have, I like the NAS short a whole lot better. The Russell's in a nice unrealized profit zone at the moment. It's not stopped us out. However, if I'm going to re-enter the Russell or then the IWM, middle line of the wave, risk on, middle line of the wave. If I do it again, because it's trying to reorganize into a downtrend, which at this point would be pretty darn important for me for a re-entry, okay, for another open long put on the IWM. All right, Quack asks, how do I find the stickers on the upper left hand of my chart indicating trend in Momo? So handy. Thank you, Kate. Kate, they are available in the members room drive. So if you're a member of Simpler Trading, go into the room drive. I've got not only those, but more, all the different indicators that I share on TOS, my specific setting for the slow stochastic, propulsion, Darvis 2.0. There's also my MACD CCI slow stow sticker, as you said. We call them trade flags, but stickers are cool too. So that's something that I make available within the room drives in the day trading room, futures room, options room, and of course in my mastery. All right. So that's where I keep those. The ones that I do make available free, the tools that I do make available free are available at Countdown Trader. And those are the propulsion dots, the grab candles, the color-coded candles, the wave, and those automated support and resistance levels, the Darvis 2.0. All right, moving on. What's the outlook for gold? I've been getting a lot of questions about gold, and I love it. Our main opinion of gold has been, before we organize into an uptrend, which we have as of now, the only setups that were valid according to the underlying structure of the market up till now, for me, were the oversold support levels with Darvis confirmations. This is all non-trending. This yellow we have in here, that's all non-trending. Non-trending means I'm going to look to fade or buy support. So that last opportunity was Jan 28, really even Jan 31. And we really looked at a window between the 28th to the 1st of February. So the last fade was the 1st of February. This is something we talked about in the futures room, premium videos. Now we're in an uptrend, which frankly is follow through from the fade. But what is valid at the moment is we can start looking at buy the dip. So what am I looking at now? I need a dip. I'm not going to buy at the highs. And I know a lot of folks like to do that. It's very tricky because it looks great in hindsight. Let's say a trader bought at the highs here on this breakout, right? The market closed below their entry. Might have stopped them out. Okay, maybe they tried it again here. Very next day, they probably experience again a second day of buy the highs pain, right? It looks great in hindsight, but let's imagine what it felt like in real time. Okay, the only time as of late that it's kicked in was, let's say you did it again. All right. And assuming the first two times that you either got stopped out or experienced that pullback, you were willing to do it a third time. Remember that when you try a strategy and it loses again, are you going to do it a third time? Well, if you did, third time ended up being the charm. Here we are. However, let's say you did it again on this day. All right. We broke out through here, or you bought the highs in here. The very next day, it pulled back on you and it's just hovering. So buying new highs, as much as it looks like it works in hindsight, the reality is it shakes most traders out, because unless the very next day continues higher with a surge, most traders are not going to have the ability to hold on to that position. Because remember, when you're buying with higher highs, especially with options, you're paying up big time. And so the tolerance for a pullback is usually quite low. So just in this example, it looks brilliant to buy new highs until you look at it candle by candle, which is how we experience the markets, right? Candle by candle. And I'd say most of these new high buys would have either been shaken out, or you're sitting at maybe a break even, unless you bought specifically this day right here, right? Unless you bought that particular candle on the 16th and were able to surge with the 17th. If not, this entire series was mostly probably 3 to 4. Bought the high, shaken out. Bought the high, shaken out. So now I need to pull back. So Zions, if you're wondering, will I buy this? I won't. And I hope I explained why buying new highs is usually, most of the time, unless you're just on the very cusp of a market going parabolic, it's going to be usually a very painful, losing, frustrating proposition. Okay. All right. MTCH for a short. Yeah, I mean, we're just coming out of the zone. So if you're looking at JR, if you're wondering when I would short MTCH, pretty much between Feb 2 and Feb 17, you had 2 weeks really of bouncing up into the wave within what is predominantly a downtrend. And only just recently on the 18th did you see the follow through, which might be on the surface frustrating, but if you're giving yourself time, as we should when we're buying options, we don't want to tussle with the theta decay monster. You had about 2 weeks to take advantage of the move into the wave, and then finally you had a nice little follow through. So today, no. Up in the wave, yes. All right. And this just goes to remind us that most traders are momentum traders. I do not momentum trade as a primary, even secondary. Heck, momentum trading is down near the very, very bottom of the list of things that I like to do. Not that there's anything wrong with it, but how do you know, Ron? How do I know if I'm a momentum trader? Do higher highs get you in the market, and do lower lows get you in the market? If so, you're a momentum trader. Let's flip this around. Does a revisit to support get you long, or a retest of resistance get you short? If so, you're an exhaustion trader. And I am the latter. I am definitely an exhaustion trader. It's very rare that I'm going to be looking at momentum. So when I see markets making lower lows and the question is, can we short? That's a momentum short. And I'm probably the worst person to ask. Straight up, I am not the person to ask for those setups. If we revisit that zone, absolutely. If not, there might be another type of entry, but it won't be one of my primary setups. Okay. PayPal. You've been in it since 175. Should I bail? It's double red. What's your first target? Don't ask me, right? So the basic question is no, don't. But the other comment is, what was your first target? You should know that. We should all know that. the moment we get into a trade. So if you've hit your first target, at this point, here's what I will say. Scale out, move the stop to break even, or maybe trail it to just above that gap level from February 2. That's tactically how I would manage the, that's tactically how I would manage the levels. All right. Okay. So I hope this, this sort of approach to a downtrend is something that everyone's noticing. Wrong. This is double red. This is a red label on the layout that you gave us. Get used to that visual. It's going to make a huge difference in your trading. As always, gang, thanks for joining me for Charts and Coffee. I'm going to head on over into the futures room for the open. Caffeinate and dominate today, gang. I'll see you tomorrow. Same time, same station.